Accounts payable represent the amounts a business owes to its suppliers or vendors for goods and services purchased on credit. The accounts payable subsidiary ledger is a detailed record that contains the individual transactions related to accounts payable. The subsidiary ledger breaks down the total accounts payable into individual accounts for each supplier or vendor. The subsidiary ledger, often called subledger, is used when the general ledger accounts have a very large volume of activity that cannot easily answer the questions the business has. Imagine that a business records all accounts payable transactions to its accounts payable general ledger account. How quickly could you answer questions about the activity? How many invoices did we receive from Sportsman, Peloton, and shirts and more? How much do we owe each vendor? What invoices make up the balance of $72,036? Could you still answer these questions if you had hundreds of accounts payable transactions every single day? Probably not. That is why businesses need an accounts payable subsidiary ledger. Think of the subledger accounts as the file folder in a cabinet drawer. You can quickly see what the business has purchased from each vendor, what returns were made, and what invoices were paid. Businesses need detailed records to pay invoices promptly, and the accounts payable ledger provides information about the individual accounts for all creditors. The accounts payable ledger is a subsidiary ledger. It's separate from and subordinate to the general ledger. The accounts payable ledger contains a separate account for each creditor, and each account shows purchases, payments, and returns and allowances. And the balance of the account shows the amount owed to the creditor. Here you can see the accounts payable ledger account for Modern Sportsman. And notice that the balance does not indicate whether the balance is a debit or a credit. The form assumes that the balance will be a credit because a normal balance of liability accounts is a credit. A debit balance may exist if more than the amount owed was paid to the creditor or if returned goods were already paid for. If the balance is a debit, circle the amount to show that the account does not have the normal balance, or place parentheses around the amount. The subledger card for Modern Sportsman shows the name and the address of the vendor as well as the payment terms. And in the details section of the subledger account, we can see the beginning balance of $1,600 followed by the invoice 5201 on January 20th for $700, which then results in the ending balance of $2,320. To illustrate posting from a general journal, let's look at how the payment on account to Modern Sportsman would look in the general journal after it's posted. We enter the date into the date columns, the account name, accounts payable, Modern Sportsman in the description, which tells us that the subledger account is for Modern Sportsman, the account number for accounts payable 205, and a check mark to indicate that the transaction was posted to the subledger as well as the debit of $720. In the next line, we slightly indent and credit purchases discounts for $14.40 and write the post ref of 504, and then credit cash on the next line for $705.60 and write the posting reference 101. So the name of the vendor after the accounts payable account tells us that we have subsidiary accounts, and then the posting reference that shows the general ledger account 205 for the accounts payable account, followed by the check mark to indicate that the amount was also posted to the subledger account for Modern Sportsman. In a computerized accounting environment, there is a separate module in the accounting system where merchandise purchases, returns, and allowances are entered. And the first thing you would do is select a vendor, followed by the details such as invoice or credit memorandum number and amounts due or credited. The system then records the transaction the way we just learned based on that information. The recording of a purchase in an accounting program is somewhat more complicated, though, than the manual way we just learned. First, you need to set up all item numbers for items you want to purchase. Each vendor needs to be approved and set up. And then the company creates purchase orders and the receiving document before being able to enter the invoice. Small businesses like Max Out Sporting Goods arrange the accounts payable ledger in alphabetical order. Looking at the subledger accounts, we can see that Max Out Sporting Goods has 3 vendors: Active Design, Athletic Equipment, and Modern Sportsman. We can quickly see the balance for each of these suppliers and the last invoice and payment. Larger businesses use computerized accounting systems that assign an account number to each creditor and arrange the accounts payable ledger in numeric order. Additionally, such accounting systems have accounts payable aging reports, which not only detail the total amount due by vendor, but the age of specific invoices. These reports age the invoices in 30-day increments, and the total of the individual creditor accounts in the subsidiary ledger must equal the balance of the accounts payable control account. And to prove that the control account and the subsidiary ledger are equal, businesses prepare a schedule of accounts payable, a listing of all balances owed to creditors. This schedule must tie out, meaning it must be the same amount as the general ledger account for accounts payable. Here's an example of an accounts payable aging summary report that shows the vendors and the amounts due by how past due they are. For instance, of the $30,539.88 that are due to vendors, $496.83 are over 90 days past due, $2,055.41 are between 61 and 90 days past due, $6,439.40 is 31 to 60 days past due, $18,960.62 is between 1 and 30 days past due, and $2,587.62 is current. The summary report is helpful to get a quick overview of accounts payable by vendor. However, accounts also look at the accounts payable detail report, which further breaks down the accounts payables by vendor and invoice. To summarize, the accounts payable subledger is a subcategory of the general ledger and shows the details of invoices, credit memos, and payments for each vendor. It helps manage the accounts payable for the business, and the total of all vendor subsidiary accounts must match the general ledger account for accounts payable. Accountants typically use the AP subledger summary and detail reports to identify the amounts to be paid.